My guess is if they had been forced into acquiring this team for the outstanding token FDV of 100 million, they would have been like, guys, like, there's no way that's happening.
Nothing is unhackable ever, guys. Ever, 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 ever. And if someone tells you that it's unhackable, run.
Like,
Run so fast.
Yeah.
DAOs are notoriously inefficient.
How dare you? How dare you say that about our beautiful DAOs?
The open interest and like size of dollars, I think, on these prediction markets is actually just not that big, I think, relative to the mindshare that they've got.
Hey everyone, I'm Kain Warwick and welcome to Uneasy Money, because what happens on chain never stays on chain. I'm here with Luca, Netz, CEO of Pudgy Penguins, and Taylor Monahan, security at MetaMask, and we have a special guest, Guy from Ethena. Hey guys, how are we doing? All right, before we get started, here's a word from the sponsors that make the show possible.
Multi-Chain Advisors is an emerging technology growth firm that has helped create over $50 billion in enterprise value for more than 80 clients, like Pith, MoonPay Commerce, and Wormhole. They've worked with some of the largest and most impactful companies in the space. They're the partner you want when you're navigating markets and trying to break out from the noise. They help navigate TGEs, go-to-market, BD, and partnerships, capital markets advisory, PR, media placements, KOL activations, and more, driving execution from launch to scale. Their results are measurable. To learn more and start building real traction today, visit multichainadv.com.
One quick thing before we get started: nothing you hear on Uneasy Money is financial advice. We're just for builders about talking about what's happening on chain, and we want you to always do your own research before aping in. You can find all our disclosures at unchaincrypto.com/uneasymoney. All right, let's get into it. I feel like it's actually good timing that we've got you here, Guy, because we've got lots of interesting governance debates within DeFi. So yeah, I feel like you're going to have some takes on that. First one we're starting with is Aave's civil war, and a question of who owns the protocol. So one of my favorite TradFi guys is Matt Levine from Bloomberg, and he talks about like who owns a company all the time. And so it feels, pretty amazing that DeFi has finally invented that same question, but for DeFi, who owns the protocol? A governance debate kind of emerged because Aave, so we have Aave Labs and the Aave DAO. And the Aave DAO is this like loose collection of people and token holders, token voting, etc. And then Aave Labs is the kind of labs entity that does a lot of the engineering work, marketing, etc. And there was a deal with CowSwap, a DEX on Ethereum, where the integration fees appeared suddenly to be going to Aave Labs, not the Aave DAO. Now you could be confused and be like, but wait, isn't it the same thing? And it's like, no, actually, it's like some different people with different controls, etc. And this was different to a previous deal that was done where fees were going to the Aave DAO. That was a deal with the Paraswap DEX. And this basically created a debate about like privatization of fees and who owns the fees, who owns the fee revenue, who owns the protocol, who owns the IP. Mark Zeller called it a diversion of 10% of the DAO income and a potential breach of alignment. And then a few days later, another token holder proposed a poison pill where the DAO will seize Aave Labs' IP, trademarks, and equity to turn it into a DAO-controlled entity, citing a pattern of unilateral monetization. Obviously, Stanny, the founder of Aave, stepped in here and said, no, guys. Aave Labs is entitled to monetize its own front end. This is our front end. We built it. And prior to that, the revenue was a voluntary donation, which I thought was pretty amazing. But he acknowledged that the DAO should have been consulted. So who owns Aave?
Oops.
Yeah. Like my hot take as a former ETHLend holder, right, is that like the token holders own the thing, but this comes down to like a question of rights, right? If the token holders own the thing, do they have a right to all revenue, or can people who are not necessarily aligned with the token holders monetize the Aave IP via front end and keep that money for themselves? That's kind of the fundamental question here. Is like, is it okay for the IP holders of Aave? I think one thing when this was all going on that I thought would have been the most entertaining outcome. So for anyone who followed the WeWork debacle back in the day, Adam Neumann famously, when they changed from WeWork to We, sold the name We, which he had trademarked, to WeWork for $5 million. And obviously Aave means ghost in Finnish, right? So like clearly Stanny was the only one who would come up with that. So I thought it'd be quite entertaining if Stanny was like, hey, you know what? I'll sell you the name Aave and the IP for like $50 million.
That would be next level evil. Okay, so if we talk about who can do the things, obviously, what's going down right now is highlighting that perhaps there were some unexpected parties that could and would do things. If they can't do those things legally or technically, then we wouldn't be here, right? This wouldn't even be a debate. I think a lot of people are having a debate around like who should, like how should this have been structured? And I think there's a lot of lessons learned there. But these aren't lessons that we haven't learned before, right? Like DAOs have always been the DAO Foundation model has been very weird since the very early days. And it's mostly been to avoid any accountability and regulations and laws. And that has some downsides, it turns out. You know, the whole structure is meant to basically remove liability from all parties, which also removes accountability and internal accountability as well. So I don't know. It just kind of sucks, I guess. Like, really, we're gonna do this again? But you know, I've never been bullish on DAOs, and I never will be.
I probably take a similar stance, right? Like at the end of the day, and actually, it gives me a question. I actually have a question to ask after this, but like DAOs are notoriously inefficient.
How dare you? How dare you say that about our beautiful DAOs?
Yeah, they're extremely inefficient. I remember they tried to make me. After I bought Pudgy Penguin, some big holders wanted me to like take the money that I used. Like they wanted me to put everything into a DAO, and I was like, "What would happen to my money?" They'd be like, "Look, everyone would respect you. You'd make the money back." I'm like, "That sounds insane." Not only that, not only that, it's insane from the perspective of like every DAO experiment has failed, and at the time it was trending in that direction. And so, you know, when you have a front end, like, correct me if I'm wrong, like Aave is DeFi infrastructure, right? Like the Aave, you know, token is powering that. Obviously, holders of that token can participate, I guess, in the infrastructure side. But it sounds like this is like a front end debate. And whenever you're trying to push the boundaries of a front end, I think like having a DAO in the middle of that is a huge mistake. And you're looking at things like they did. Like I thought they just had one of the most amazing consumer app launches from like an experience perspective of all time. It's like one of the great consumer apps that I've ever felt and experienced via crypto app. They're clearly not being negligent or pocketing that money. Like they're clearly building. And then my question to maybe you guys is, you know, I actually got really bullish on Aave when they released that app. Is that app a part of the token accrual model, or is that defined in the whole front end bucket? That'd be like an interesting answer that I would like.
No los dos. Like it is both in the thing and not in the thing, right? Like, and this is the weirdness, because it's like, okay, you got this amazing mobile app that's powered by Aave, the protocol, but uses Aave's IP, which is not owned by the protocol. It's owned by Labs. And Labs is, I guarantee you, if you look at what the App Store, you know, company that released this app is, it's going to be Aave Labs, right? You know, so there is this weirdness of like who actually is getting the benefit of the thing, right?
I would say Aave holders, regardless, what do they want? Like the money to go into some inflated, super big treasury that's not getting spent anyway, marginally? Like, what extra revenue is that going to do to the $500 million balance sheet that probably is Aave's, DAO balance sheet? What's the couple extra $1 million going to do? Right outside of like
principle, sir. It's the principle of the matter that like and it's interesting, like ACI, right? So Mark Zeller, who I know guys had some interesting interactions with him on the timeline back in the day, but I've kind of gotten to know him, right? And like he is an Aave soldier. He's in one of the group chats that I'm in, and he's quite active. And like he's an Aave soldier, like he's just there for the cause. Like that's all he's trying to do. And I think that the view is that like no, Aave is actually a pretty good DAO by like most measures, and we shouldn't kind of paint the Aave DAO with the same brush as like other DAOs that have failed or whatever. Like we are actually kind of maintaining this, and if we just start siphoning off funds to labs, then we're basically in like a similar situation to Uniswap. And I think the view is like this is going in the wrong direction, not the right direction from the DAO side of things. But yeah, it's a tough one. I don't know, Guy. What's your hot take here?
Yeah, I think it's not even specifically with Aave, but like broadly been a point, I think, in the last few weeks with we saw the Axelar news this week with Circle. We saw Tensor selling some bit of the business to Coinbase, and then I think there was another one with Pump Fund where there's a bit of people upset with the fact that like you own a token and then the IP and sort of equity of the business is just being sold out entirely separately. And I think that's sort of part of a broader theme that's going on here to your question, Kain, which is like factually, if you own the token, you don't actually really actually have the rights. Is kind of like what we're kind of seeing pretty consistently across all of these different events. I think as it relates to the Aave piece this week, I personally think it's much easier as like a single structure where you never have any question whatsoever that cash is going to a separate entity, different developers who are doing different pieces and trying to sort of extract the margin out of doing that. I think especially when you sort of consider just like the size of the cash flows that are coming out there are just pretty insignificant, I think, compared to like the size of Aave, the valuation of Aave, and having like this negative sentiment that sits around it. It's like, does $10 million sitting in a different side pocket really move the needle for someone who owns hundreds of millions of dollars in this token that's worth billions on the other side? So I think I've always been of the view that you kind of want to keep these things extremely clean and simple, which is just like if there is cash flow being produced, it's just one entity or one sort of bucket that's receiving that. And I obviously think that like people increasingly are sort of converging on that being the token. And I think Uniswap and what Hayden did a few weeks ago with their proposal, I think I had a lot of respect for the way that he sort of changed direction and almost 180'd from what they were doing historically. And I'm sure the Aave guys will work it out. I was with Stanley this week, and I think we both know that this is not like a nefarious thing that he's doing, and he's like the most aligned person behind Aave. The founder is still here like 8 years later. So I know that he's got like the best interests at heart for what they're doing, and that they'll sort it out. Yeah.
I think the interesting thing is like, organizations though are made up of people, right? Like even if you have a semi-benevolent dictator like Stanny, right? Like it may not even be the case that he was across this, right? Or like you might have been like in a room and someone's like, hey, we got this cow swap deal. Like, where do we throw the cash? And it's like, chuck it in that bucket, and not really thinking that this would turn into, a pitch battle. But I mean, I think like more broadly, talking about Uniswap, we've spoken about this a couple of times. Like, there is this movement towards clarity of token ownership and token holding, and what do you own, what rights do you have, et cetera. Which I think is kind of coming from. It's not like Hayden was like, I don't want to say he was anti-token or whatever, right? Like they released a token that was somewhat forced upon them by Sushi, right? But they released a token, and then they were like, oh shit, like this is gonna have consequences. Like let's let's kind of get out of the way of it, right? And then, now we're in a different regulatory environment, and so they're like, actually, let's fix this problem. I think Hayden the whole time has wanted to kind of have more clarity, more certainty for token holders and anyone else involved in Uniswap. And I think that's the same thing for standing. Like, ETHLend was a pure DAO. Like, Aave's gotten huge, and there's been all of these different things that have kind of emerged over the years. Like, I think everyone involved wants clarity, but it's hard to kind of see a path out that's super clear here.
Yeah, and I think ultimately this is all around expectations, right? So the token holders, so the reality is that tokens were created for a variety of reasons. A lot of those reasons include basically like avoiding the legal situation that was in yesteryear, right? Or in the case of Uniswap, like literally because sushi came out of nowhere and was about to vampire them. So even though people have these expectations around these tokens, I'm not sure that they've ever been super logical based on like the realities of the teams, right? Like none of these teams ever came out and said like, these are what these tokens are going to do. You're going to have like full ownership and voting and fees. And
you couldn't say anything about the token, right? Like you had to just be like, there's a token over there. Make of that what you will, right? Like,
and so I think that that's one thing that I would say is actually a failure of the SEC, right? Even though they were actually going after enforcement against Uniswap and against many, many others, ultimately what it did was it created a huge amount of uncertainty where the expectations were not clear. And ultimately, you could argue that if token holders had expectations and believed certain things about the token and then got rugged, part of that is a consequence of people sort of dancing around and trying to avoid
100%. Like it's a direct consequence. Yeah. Like, well, I mean, the most ironic thing is Aave came out finally this week, the same week, and was like, hey, the SEC has finally capitulated and said, actually, you guys are okay.
Yeah.
Like 6 years later or whatever, right? So, the unintended consequences of 6 years of SEC investigation, you imagine, that there are these lunatics like looking over your shoulder at everything you do. And, there's no question that creates like perverse incentives to obfuscate things. And also like, it's not like you have this regulatory regime that's like, hey, here's a bunch of clarity about what you can and can't do, and we're going to watch you really closely. They're like, hey, everything you're doing is bad, but we're not going to tell you which things. Like, good luck to you, right? Like, it's
yeah. And so when I think about, so I would like to like zoom out and like let's think about like best outcomes. Like if we could go back in time, like what's the best outcomes? In my opinion, the best outcome for Uniswap, for Aave, for everything, right, is that from day one, the token expectations and the alignment around those expectations was clear. Like nobody's getting rugged. Nobody has false expectations.
Yeah.
If the token was designed to catch all the revenue from all of the front ends, let's define that and then let's do that. And then if you fail to uphold that, that's going to be problematic. And obviously, when you have that clarity, then you also have accountability that can come with it, right? If Aave were to have said previously explicitly, like all the fees from all the front ends are going to the DAO, and then wakes up one morning and rugs that, that's a problem, right? And it's a clear problem, and there's paths to recourse for adjusting those problems. That's one of the worst things that happened from the regime, is just like none of that was available, and so everyone sort of gets rugged all the time because they're all operating on these undefined, unclear expectations.
Also, there's no norms, right? Like if you go into trad finance, there are norms that, and I remember, Guy, like you and I talking early on when you were designing governance, and like, literally every single thing that you did, you sort of have to design from first principles. You're like, what is the optimal thing given my circuit? Like, that's not how TradFi works. TradFi, you're like, I'm starting a company, I go to Delaware, they give you a thing, you write a couple of points in there, and like every single person who's interacting with that company has really clear expectations. If you do something weird, like Adam Newman WeWork style, everyone goes, whoa, 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 what's going on here, right? But tokens, it's like every single token has their own weird, idiosyncratic, bizarre structure because everyone invents it from whole cloth every time.
Right. And it's not just Aave and Uniswap and I mean basically everyone. It's not just everyone that has like a legitimate token, right? And it's operating in good faith. This also creates a huge opportunity for, malicious people and scammers to deceive people, right? And that's what, ultimately my problem with sort of like the legal and regulatory approach to this ecosystem is it just makes it so much easier for people to be scammers. And then it also just confuses the heck out of everyone who's actually trying to operate in good faith and like innovate and deliver good value. It makes it really, really hard because, now in both the Uniswap drama and the Aave drama, there's strong arguments being really heavily debated on Twitter right now that are calling both of those like basically scammers, right? And if you're like average retail, I don't know, it's going to drive you to actual scammers. Like,
yeah. If everything's a scam, then like you get this false equivocation of like nothing, everything's a scam. If Aave is a scam, then like shut the whole place down. Basically.
Exactly. So I don't know. It just sucks. I hope that the coming years will improve the situation. And, I hope I have faith Aave will, work through this, but I hope that this is like a new era of figuring out what actually works with regards to foundations and DAOs and token holders and rights and expectations. And we actually just, get back to innovating, not avoiding laws.
All right, let's if we don't have any more, I'm sure this is going to come back. We've been talking about DAOs. This feels a little bit like bear market things, but it's going to get so much more interesting if we do get into like a prolonged bear market here for sure. The DAO warfare is only going to escalate, I feel like. But let's move on to Solana Firedancer. So Firedancer is a Solana client, validator client that has been in development for like 3 decades now, I think, made by Jump Crypto and is finally being released or was finally released. The interesting thing is, this is my favorite thing about Solana is how they get to like have the same fights that Ethereum did, but like 3 years later or 4 years later. So now there's this client diversity conversation going on of like, how many validators should be running Firedancer versus this, versus the OG validator client. What I think is also interesting though, and this is a conversation that kind of brings up Fogo as well, the SVM chain that is going to come up next year, I think it's kind of out, but in like a closed alpha. So Fogo runs on Firedancer client only, right? Whereas Solana has like backwards compatibility with the OG client. You can't just switch to Firedancer. So even though Firedancer is a lot faster than the old client, there is some tension between like, which client do you use and what are the potential issues of like having this new client, which is much faster, but also having to maintain backwards compatibility and it holding Solana back. So I think when Fogo is fully live running on this pure Firedancer client, it's going to create a little bit of tension in the Solana ecosystem is my expectation. I think there's already been a little bit of tension here, but overall, I think it is bullish for Solana to have multiple clients. Like it's taken a while, but we've finally gotten there.
I'm bullish.
Bullish?
I'm bullish Firedancer. Somebody that I'm not going to dox, like that I think is the smartest technical person that I know in crypto, says that it's not going to go. It's Firedancer on Solana is more of a pipe dream than I think people think. That's what he said. And I actually spoke to him about it last week, believe it or not. And like, why it got brought up, I don't know.
Yeah, I mean, this is the thing that the discussion that I've seen many times is like, okay, you've got a much faster client, but you've got an existing network. You can't, and this is, go back to like Ethereum times, right? Like we had, proof of work, and we moved to proof of stake, and I think there were 4 or 5 validator teams that were funded by the EF via grants and various other community things, various forms of communism, and those clients went out and kind of competed with each other. And I know a couple of those teams quite well. The Sigma Prime guys are in Australia, and so Lighthouse and some of those clients. There is a bit of tension because they're like, our client is better, and therefore people use it. And this is where all the Lido conversation came in of like, you have an obligation to have client diversity, et cetera. So it will be interesting to see whether or not the Solana Foundation steps in and kind of forces people to use these different clients, or incentivizes them, maybe through some non-communist form of incentives. I don't know. It's Solana, so you never know what they might do. All right, let's move on to this Circle Axelar deal. So Guy, you brought this up in the discussion about Aave. This is even more wild to me. Like from a DAO bearishness perspective, right? So Circle. So I think there's 2 things. One, there have been more acquisitions, like mergers and acquisitions in crypto in the last 2 months than like maybe in all of history. I don't know what that means, if that is like some indication that we're maturing as an industry, but like we are actually finally seeing mergers. But it's crypto, so the mergers are going to be fraught and insane. And I think this is one of them, where Circle has acquired the Aave Labs team and IP. So the equivalent of acquiring Aave Labs, right? But leaving the token and protocol behind. So the core developers they've acquired that team, but not the AXL token or the network. So Axelar fell like 15% after the markets realized that it was kind of being left behind in this deal, and that there's no direct benefit to token holders. But the network is now going to continue independently under community governance. Now, the reason why, my hot take is, the reason why we have so few mergers and acquisitions in crypto is because the premium that a token commands in the market usually is so insane that no person would ever, like, I don't know what the market cap of Axelar is. Maybe someone can tell me. My hot take is going to be like hundreds of millions, right?
It was hundreds. It was $1 billion a year ago. It's 100 million today.
100 million today, right? So it's 100 million today. My guess is Circle did not acquire the Aave Labs team and IP for 100 million. My guess is it was more like 5 or 10, right? And if they had been forced into acquiring this team for the outstanding token FDV of 100 million, they would have been like, guys, like, there's no way that's happening. Even though Circle has a lot of money, right? So instead, they're like, why don't we just acquire the team and you guys can basically like move on and leave the network behind, which is pretty wild. I don't know. Speaking of like, what rights does a token holder have?
Spoiler, they have no rights. Like, none whatsoever. Like, the builders, the creators of the token have no obligations whatsoever. If they want to go join Circle, okay. Like, what are you gonna do about this? Is it right? Do I think it's like the best outcome for everyone? Like, no, they built their entire thing from the token, right? On the backs of the token holders. And then they're like, okay, sweet, bye. Like, it sucks. But at the same time, like, there's no structure for accountability here. And I don't think that it's sort of a lose-lose. Like, if you were to force the structure so that Circle would have to buy out all the token holders at the market value, Circle wouldn't. They'd go find another team.
And that's the fundamental problem, right? Like that right there is the crux of the problem, is that like the market, an acquirer looking to acquire, and you have these issues in TradFi, right? Where it's like there's a thing that's trading at like a premium. The shares are fairly illiquid, and then someone comes along and like makes an acquisition offer, and it gets rejected by shareholders because they're like if the token holders had the ability to reject this acquisition, they absolutely would. They'd be like, no way. Like, Circle, you pay 100 million, and then it's like, well, it's not worth 100 million. It's like, I think there's a lot of token holders that would say, too bad. That's the price of the token, and we'll see you next year when it's worth 20.
Yeah. And that's the most interesting thing about the tokens, is that it's not, we call it alignment, but it's actually not aligned or creating alignment in a lot of cases.
Yeah, and I think there is like a sensible middle ground here, which isn't like full security law disclosure type stuff, which I think is probably too onerous for the speed at which like crypto moves. But I do think that like we can point to something like this and just say it's obviously just not a great situation for people who are buying into these things when you have like absolutely zero claim or right on anything. This to me feels like a pretty basic thing that most people should be getting if they're buying into something, which is like the team that's actually built this isn't going to turn around the next day and walk off. But it hasn't obviously been crystallized in any formal way now. I do think like the gatekeepers who could actually drive change here are probably only the centralized exchanges, which is like if you're going to get a listing on a Binance or a Coinbase or whatever it is, you need to agree to XYZ in terms of what actual claim and like rights people buying into this token would actually get. I don't know exactly what that looks like across the industry, but I think if it is going to change at all, it probably has to be done at the centralized exchange level, because I think they sort of gatekeep, people getting access to these products.
The problem with like SEX listing conversations, right? And I may or may not be having some conversations like that at the moment, is their motivation and concerns are like all about liquidity and vesting structures, and like they're like token holder rights. It's basically not even in the conversation. There's no conversation whatsoever about like what obligations does the protocol have, the team, the DAO, etc.
Which is kind of what I'm suggesting. Maybe we should revisit and change, because like you can kind of ignore it for so long, but if even the centralized exchanges, right, are incentivized for their users to not consistently lose money the whole time, and if people are coming to gamble in the casino and they're consistently losing, they're going to stop at some point in terms of coming back. So yeah, I think for like long-term health and structure, I think that something like this does make sense in like a light form.
Yeah, I agree with that. And I think it's just, it goes back to partially just how fast things were moving, partially the regulatory regime around such things, right? Like doing any of those things, like giving token holders rights, like you're going to go to jail.
Yeah,
right?
Yeah, without some regulatory. Well, I mean, the interesting thing is, like, Luca, you can just be like, it's a meme coin, bro. Like, and obviously your situation is quite a bit different to most DeFi protocols, where it's like this is a representation of the IP. I mean, how do you think about the Pengu, Pudgies, little Pudgies, Rogs dichotomy? Like,
it's an interesting one, because if you actually think about the problem, it's a lot more complex than you think. So like, for example, the line of thought came around at one point where we were like, give equity to NFT holders or token holders. We've thought about that. But if you actually think about the strategy, right? Like you can put an insane ceiling on where these things, all of a sudden the speculative asset doesn't become speculative anymore, right? And so like you almost kill the fun. Like from a strategy perspective, like you could kill a lot of the fun. I actually think Guy is completely correct in terms of like the thread that he's pulling. I think like step number one, that's like every exchange can implement, that is if a team does this, it's like auto delisting. Because if you actually think about it and look at the charts, they're actually getting rewarded for doing this. So like Tensor is a perfect example, right? So like Tensor is trading a lot higher than it was pre the acquisition, in which the team completely left the project, right? Like at a minimum, if these things happen, these things have to be like auto delisted within 48 hours because they're, you know, if I'm a team member and I'm looking at the Tensor chart, I'm like, this is great. I'm going to have more liquidity if I do this, right? And I'm going to get a cash out. And at the end of the day, like, you have to understand the human element of this is like traders found, like, you can have this like very like purist approach. And I remember, I felt like over the years I've gotten burned for having this approach, and I'm a little jaded on like this stance, but like when it's all said and done, everyone's out there for themselves, right? And like right now, this thing is looking like the best thing for a founder to do who has like a failed token. And I think it starts with at a minimum delisting. I think for my take, like there's a lot of pros and cons to this. And I think the biggest one is just putting a ceiling on the speculative asset, because all of a sudden, if my token is a proxy for equity, you know, you're no longer, the story that you're telling yourself is no longer the story of, you know, we're getting 1 billion impressions a day. We are the mascot of crypto. We're the biggest consumer brand that's ever come out of crypto. You're now then looking at my revenue and my EBITDA, right? And you're like, you're doing the math on that. You're not doing the math on the memetics and the culture and comping it to a Doge and a Shiba. I'm now like a standalone brand coin, and that's like all I am. And I better like hope I can fucking, you know, 5x revenue fucking next year. If not, I'm cooked. So I think like it's a catch-22 that I think like everybody be like, I would love some Pudgy Penguin equity, but like if my take, and this is, I have a very unorthodox stance here, you know, I think all tokens are a proxy of mindshare. I think if you index them for anything else, I think it's a big fat giant mistake. I even have a really compelling take on buybacks and how that thing is a complete giant farce. As somebody who's put $20 million into the books before, it really does nothing, right? It's all just proxy of mindshare, right? Like, and if you don't, like, you know, Bitcoin has won because it's proxied the mindshare of digital gold, and the mindshare that's been able to capture has increased over time, right? And people have believed that. I actually just think like a lot of people need to understand more of what this stuff is, which is again a proxy of mindshare, and that's a bless. It's a catch-22. It's what makes crypto so great, and in cases like this, it what makes crypto, you know, awful and feel immature and feel, you know, lacking in substance. But no one's crying when it pumps 1,000%. So it's just like it's really.
Well, I think this is like I think that's a very interesting take, and it sort of aligns with one of the views that I have around like token prices expand and and compress based on like people's time horizon. Like at the moment, people's time horizon is like next week, right? And so everything gets compressed because everyone's like, how much will this thing be worth next week? Like, what is it going to do next week? How much better will it be, et cetera? And so everyone starts to become super bearish because they're like, this thing was worth so much money. This token was worth so much money when everyone was looking out to like 2035, right? In 2035, if crypto is, you know, the rails that all finance works on, and this thing has the mind share today and it maintains that mind share, then it's obviously going to be worth, you know, trillions of dollars or whatever the math is, right? But if we're looking at like what happens in, you know, 2 weeks in January, then, you know, probably it looks a lot more bearish, right? So it's almost like early stage companies in a nascent industry, whoever is the dominant one, you go, well, if this industry expands 100x, then the dominant one, the one that has captured the most mindshare, attention, traction, whatever you want to call it, is going to continue to dominate. But if everyone all of a sudden goes, actually, that industry is a joke and is not real, then having the most mindshare doesn't really help you, right?
The problem here is actually quite paradoxical because, you know, in times like this, the trader becomes an investor, when in reality, like a majority of the liquidity sloshing around in these things are quantitative traders, right? And a quantitative trader is not an investor. So it's like you're a quantitative trader when you want to be, and then like when things are not going your way, you're an investor and you want investor rights and all the things that come with it. You have to be like honest with what a lot of these people are doing. I promise you, 98% of the people complaining about this are quantitative traders. Trading the chart and trading whatever analysis and RSIs they have going. It's not. And again, another catch-22 with crypto is like it's one of the things that I think plagues us.
Same thing with farmers, right? Like farmers become your number one user very quickly when like when the fields become barren, all of a sudden they're like, I'm your best user and you're treating me badly. How did this happen? All right, let's move on to Rushi. So Rushi was the founder of a token called Movement Labs, which was a new L1. Shockingly, can you believe it? It was an L1. So Movement Labs was going to build a new L1, and it was going to be based on the Move language. Now, my favorite part of all of this, and I don't think we've talked about this yet, Tay, so I'm waiting for your head to explode. But the best part about Move, if you're not aware of this, right, is that as a language, it's unhackable. So that was the claim to fame on like why Move and movement based chains were going to be so good. And Rushi sat there at one time and said to me, like, the thing is, like, the Move language is so good that it's not hackable. So if you're using any other language, you're basically you're NGMI.
Nothing is unhackable ever, guys. Ever, 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 ever. And if someone tells you that it's unhackable, run.
Like,
run so fast.
Yeah. So Rushi's come back, and there was a whole drama. He was ousted from Movement Labs because there was this market making drama of tokens were sold right after TGE. They had token locks, et cetera. Talking about like token incentive misalignment, token holder misalignment, right? Whether he controlled the tokens or Labs controlled, someone had a bunch of unlocked tokens and dumped them. We ended up with him coming back running now a VC fund, I guess, which is extremely on brand for someone who's dumping.
I think it's liquid. I think it's a liquid fund.
Oh, it's a liquid fund? Okay.
It read as a liquid fund.
Okay. All right.
Is that better?
So
does that make it okay?
Yeah, well, no comments.
I mean, in fairness, like a liquid fund, their job is actually to dump tokens, right? Like to just buy and sell tokens. So, to go back to your point, Luca, like they're just traders, right? Like it's, but I think the claim was they're going to like help scale markets or something like that. So, yeah, I'm not going to lie. This Knicks group scares the shit out of me. I can't imagine anything good is going to come out of this.
I just wish, and this is super idealistic, okay? But I'm just going to say it anyways. I just wish that when someone royally screws up and screws over everyone, that they wouldn't be able to come back. Like, there are so many talented, legitimate builders and people that are innovating here that deserve that mind share and that chance to thrive. And instead, we just keep doing the same freaking broken record of these stupid scammers. And the amount of money is just absurd. And I just wish it wasn't like that. That's all.
Yeah, I think I share a similar line of thought. I think my problem is less like, I think like obviously people deserve a second and a third chance. I think that's always important. I'm more frustrated with the fact that like, people can come back and go raise $100 million. I think the raising of the $100 million is the bigger problem, right? Like, who are these capital allocators? But what I've learned, I think I mentioned this in the last podcast, you'd be surprised how stupid some of these guys are. The more that I like maneuver around, I'm like, dude, you manage how much money? You're like a big retail trader. You're no better than that guy, sitting in his mom's basement on Forex. You just have a couple $100 million in size. You'd be so surprised how many like of these guys I speak to, and I'm like, I just told you what you're, some guy will like message me and be like, so what are you doing? What's the big buy? I'm like, look, man, Pengu is the face of crypto. I've talked about you like 5 times around this. Look, I'll tell you, I was a Move investor. Rushi was a young founder. I was friends with him. I thought he was a good dude, materially. I can't speak to what he did. I don't know that much about it. I was a stoked Move investor too, up until, the whole drama and nonsense. Yeah. Who knows? I mean, look, he's, who knows? I don't have much of a take other than that.
All right, Guy, if you've got nothing to add.
Yeah, I'm not sure I do. I'm not sure everyone deserves a second chance to come back to the space. Sometimes we just need that.
It's a good point, right? Like, should people get a second chance, third chance, eighth chance, whatever? Like in this case, I think it's fair to say, like, Rushi turned up, things happened. This is his second chance. Like, does someone deserve a second chance? Part of the problem is that no one has any clarity as to what actually happened. Like, there's, I'm sure there's people who know, but like, if you're on the timeline, like I'll say myself, I wouldn't, hand on heart say like, I am 100% certain that this is exactly what happened and this is what this person did, et cetera, et cetera. Like it's so hard to know in crypto sometimes what actually has happened. I go back, I think I've mentioned this before, but like when Do Kwon got the subpoena in whenever it was, 2020 or 2021, it just happened that he was on stage, I was on stage, and Gav Wood was on stage. Those are the 3 people that were on stage at that time, right? And someone tweeted, someone just got a subpoena as they were walking on stage to speak. And everyone was like, who was on stage? And they were like, it was these 3, right? And I was like, guys, it wasn't me. And everyone was like, sure, it wasn't. And then like Gav Wood didn't say anything. And then everyone's like, it's definitely Gav Wood because he didn't say anything. And if he didn't say anything, then we know it's him. And like Do Kwon, meanwhile, was like, it's 100% not me. And everyone was like, oh, Do seems like a good guy. It's fine. It probably wasn't him. But like genuinely for months afterwards, people would be like, it was really you, wasn't it? Like people, it's so hard to know. Like this was like hundreds of people watched this thing happen, and yet crypto Twitter could not figure out what actually happened. How are we supposed to untangle who owned the tokens, who sold them, whether it was a market maker, et cetera? Like without some investigation and report or something like that, which is never going to happen. It's easy for someone to just be like, no, it was all a mistake, and then raise $100 million. But yeah.
Yeah. And by the way, so the Move thing was actually, I've seen some of the documents regarding that, the stuff that came out. It is extremely weird. And the fact that
the deal is terrible. Like it's a terrible deal, very obviously, right?
And the weirdest thing that I kept going back to, and I was like, someone please answer this question, is like, okay, so you have Movement Labs, you have Rushi, you have the tokens, you have these market makers, you have market makers that are sort of known to be like shady, sketchy, right? Like Binance like kicked Web3 port off, but the deals were with these like entities that like, some of the entities were like Web3 port, but it was like a Gmail address. And then you have like other entities that just like don't even exist. And I was like, there was a point when I saw the first like couple documents and I was looking at them, I was like, wait, did someone at Move just get like business email compromise scam? Like, is this, right, or were they intending to do this deal? And I think the final outcome was that they intended to do this really sketchy deal. But for a minute there, I was like, did they get scammed? Because like there's a really common sort of like Nigerian-esque scam where basically they'll compromise an email or sort of get in the middle of communications and then like change the right. So you think you're doing a deal with or paying an invoice or whatever, they sneak in, they divert the flow of your funds to a new place, which is the scammer controlled address. For a minute there, I was literally like, can someone clarify this? Unfortunately, it seems like the clarity was that they did intend to do a deal with a no-name entity where this other entity was on both sides of the deal and like was a real mess.
But this comes back to
like,
the exact same
it's a complete
thing of like
disaster.
But we don't this wouldn't happen in TradFi because you have like structures of how an IPO happens, and there's particular people, and yeah, it's inefficient, and yeah, there's a lot of costs and transaction costs and whatever. But you can't just invent your own way of doing everything. Because people would be like, hey, let me see the docs, and then it's like a crayon,
Yeah.
like
what is this
Gmail
address?
And so no, everyone would be like, all right, like, well, obviously I'm not like dealing with crayon guys, right? But in crypto, it's like, like maybe they're like smart kids, it might be fine.
Yeah.
All right,
because we keep giving them $100 million.
Before we continue, here's a word from our sponsors that make the show possible.
Multi-Chain Advisors is an emerging technology growth firm that has helped create over $50 billion in enterprise value for more than 80 clients, like Pith, MoonPay Commerce, and Wormhole. They've worked with some of the largest and most impactful companies in the space. They're the partner you want when you're navigating markets and trying to break out from the noise. They help navigate TGEs, go-to-market, BD, and partnerships, capital markets advisory, PR, media placements, KOL activations, and more, driving execution from launch to scale. Their results are measurable. To learn more and start building real traction today, visit multichainadv.com.
All right. Welcome back, everyone. So Tarun and Dan, we talked about this last week. They have made up. Tay posted in our channel the Mike Tyson holding two doves, now Kith. So that was pretty hilarious. I wish we could share screens. I would put that meme up. Maybe we'll tweet it later. But yeah, they seem to have backed away from the brink, which is good. I don't know, Tay, what was your take in the end of all of that?
I'm so happy that they made up, first off, because I think that it was a really common situation where the specifics that Dan was taking issue with and the specifics that Tarun was like, the point that Tarun was trying to make was they were all ultimately like not that out of alignment. Like Dan was taking a lot of issue with the headline and the way the research was done and the technicals of the research, while Tarun was basically like, wait, but there's definitely like a better way to do this, and there should be some formal research on ADL and the harm that it caused, and like especially if there's like a better mechanism. I appreciate the debate because I learned so much about the different mechanisms. And I think it was like 2 or 3 episodes ago, I was like, what would reduce the harm? And we did get a lot of answers out of that. I mean, we don't really have answers, but the conversation is there. So we could potentially have answers someday. And all in all, I hope that both Dan and Tarun, because here's the thing, ultimately, I believe, even though I do not have the technical expertise and understanding of this stuff, I believe that there's probably a way where 1010 could have been less harmful for people while the protocols could still remain, like the risk to the protocol could be about equivalent, meaning that the protocol is not going to blow up. Like I truly believe that. And I hope that Hyperliquid and all the others, keep trying to improve that so that we reduce the harm that can come to end users. And I think that this conversation is part of that ish.
Well, yeah, I mean, Guy, we've got you here. We talked, a month ago about like 1010 and ADL and, Ethena's position and centralized exchanges. So if I were you, this would be the thing that would be keeping me up at night. So like, what's your take on this? How do we solve ADL?
Yeah, I think it's also probably worth clearing up pieces I saw on the timeline around Ethena having like special treatment and stuff on ADL contracts with the exchanges, which isn't correct.
So you're confirming that Ethena does, right? You got some side deals. That's what you're clearing up.
Confirming the opposite, which we don't. I wish we did, and if we did, I think we'd be talking about it more and making that clear to people. But I think generally the way that the waterfalls work is that they tend to like ADL accounts that have the highest amount of leverage and like unrealized P&L that sits on the account. So the idea is that if you're going to be transferring wins from one user to cover the loss of another, you tend to sort of start with the riskiest accounts, i.e. the guys who are the most levered and in the money. Because Ethena doesn't use any leverage and tends to just be on A, the largest exchanges, but B, just BTC and ETH. You haven't actually seen ADL on BTC and ETH on the 4 largest CEX venues in the last 6 years. So all the ADLs that we saw, even on 1010, were basically like really illiquid altcoins and then hyperliquid. That was kind of like the buckets of where they fall. So that was just a very intentional like risk decision that we took, which was like, you can make more money doing the basis on a liquid shitty altcoins, but we just think it's safer through the cycle to be doing this on BTC and ETH on the large exchanges. So yeah, just to address that piece, there were no side deals. It was just kind of like a risk management type of decision that we took early on, which obviously paid off on that day. I think the one piece that I think the industry should like consider to try and improve the way that this sort of like ripples through is basically like some traders actually want to kind of be closed down during an ADL, like when the markets crash. So like a lot of people who are short on hyperliquid on the 10th, when you're getting closed out of your position, like ADLs tend to be pretty close to where the bottom of the market is. And in some ways it is actually like a self-reinforcing mechanism, which is like when the ADLs are occurring, it's kind of actually causing a bottom within the market while that is happening. And there are some people who would like to actually be closed out quite close to the bottom by the protocol itself. And I think a lot of people who are short and hyperliquid on the day kind of made like a perfect exit basically from their position while that was happening. The people who got screwed the most were actually people who are doing the basis on long perps on one venue and then short perps on the other. So like you kind of got away with it if you had like spot long on one side, short derivs on the other. But when it was derivs on both sides, you kind of got like pulled out of one leg and then it didn't match up at all. The reason I'm giving that context is that actually, if you gave users the option to say, I want to be ADL'd when this, like put me at the top of the queue, right? If your account that you're using there is just like directionally short things or doing like spot versus per basis, you might actually just say, I want to be at the top of the waterfall, while other users like Ethena, for example, we never want to be touched within that waterfall at all. Just put it to the bottom, please. But actually just like putting it on the user to just like select and click and say, I would actually, this is where I would like to sit within the waterfall. Anyone who's like opted into it, first you do like a pro rata socialization for those users of the losses. And then you sort of go down to the mechanic that works now for everyone else as you go through it. So that's one thing which I think we could improve. And I think the second one is actually,
it wouldn't be crypto though if we didn't like auction that off, right? Like we should auction off the right to be at the top of the ADL queue.
Yeah.
Who's building this? Come on, someone.
Yeah. And then I think the other one is actually just like transparency around, if you remember, like in the BitMEX days, you actually had like a bit of a meter on your account, which is saying like you're close to the top of the ADL queue or not. And it wasn't like perfect information, but it was some information so that you can actually try and address things yourself to try and reposition where you sat.
It was like a picture of Arthur in a Ferrari, right? It was like driving along, like getting closer to the top of the ADL queue.
And yeah, I think like there is no clarity whatsoever with how insurance funds are being used on centralized exchanges and how that interacts with ADLs specifically. Like it's kind of, some exchanges will dip into the insurance fund, sometimes they won't. It's very different in terms of the treatment on different coins. I think this just feels like a very easy thing to make extremely clear to people and just put on a dashboard, which is like, this is the insurance fund that sits next to each coin. Because the more that you can like give people this information to price things, the better liquidity is basically, because the only thing that everyone hates is like uncertainty. And if you give people information to say, this is where you're sitting in the queue, this is the size of the insurance fund, you actually don't see like liquidity gap out in the same way that it did on the 10th of October.
Because people are like, de-risking if they think they're,
like market makers are like, I don't have this information, so I don't even want to trade. Like there isn't even a price that I want to touch this because I'm just like shooting in the dark. And so I think the more that you can actually just give people these inputs, that's actually a useful signal for a lot of these market makers to actually just turn up and provide liquidity even when the world's like crumbling. Like,
So this wasn't on our agenda, but you raised an interesting point. I haven't done any research other than just seeing this on the timeline, but Hyperliquid burned a bunch of hype that was in their assistance fund like yesterday or the day before, or it was already burned or something like that. Does anyone have any info on that? Because I it did feel a bit strange to me. I was like Why are you burning the assistance fund?
Yeah, no, I think that was like the buyback wallet where the programmatic buybacks had been deposited, and as far as I understood, no one actually had access and control without like a hard fork of the chain to be able to.
Right. Okay. Right. So they were like, but so that's not the assistance fund then, right? Like that couldn't be the assistance fund if it's in a inaccessible wallet.
Well, I think you could hard fork the chain and then be able to reallocate it if there was like a huge hack or something like that. But I can kind of see where you're getting to there, which is like, was it buybacks to then use for a rainy day? Because now like the rainy day thing has been banned. So yeah, there isn't like a reserve fund that's sitting behind things.
The assistance fund denominated in hype doesn't make any sense. So it's probably not that, right? Because I mean, do you have assistance funds denominated in the native currency? I mean, isn't that like the FTX debacle, right? Like everything was denominated in FTX tokens, or once it blew up. So I hope their assistance fund is not denominated in hype and it's denominated in dollars. But this seems like the buyback wallet, and they just
the buyback wallet just burned it.
Yeah, that's fine. That's great.
All right, we'll do some more research. I just saw a few people being like, they burned the assistance fund. I was like, that we might need assistance, guys. Like that might.
We always need assistance, guys.
We always need assistance, guys. Like, why would we do this? All right. Next thing that we're moving on to, North Korean fake Zoom crypto scams go daily. So SEAL Team 9/11, who are volunteer organization. Is that fair to say? I don't think they monetize their activities. A volunteer organization that tries to keep everyone safe. Have warned that North Korean hackers, some of whom are good friends of Tay and I did message fake Nick. So one of the North Korean hackers, yes. So I messaged fake Nick, and I was like, hey, I'm really sorry to see that you got this scam tag. And he was like, yeah, this is bullshit. I don't know what's going on here. I don't know. It's like so amazing. Just like the level of like, this is not fair. Why would Telegram target me? I haven't done anything wrong on this account. But anyway, so these guys go around and they compromise Telegram accounts. And, so they'll compromise my account and then they'll message you and be like, hey, let's jump on a Zoom call. So if I ever message you asking to jump on a Zoom call, run. Like, I'm not going to ask you to jump on a Zoom call. And then they have all of these different ways of getting you to basically like run some software on your machine. Like, I thought this kind of declined a little bit, Tay. Like, how
no.
these come back?
It's so much worse.
Really?
Yeah, because they've completely... So fake Nick, fake Wyatt, those were fake accounts. Like, Nick and Wyatt didn't get hacked. Yeah. Right? Over the last year, they've pivoted to basically only using taken over accounts. And so it's like if real Nick, where you had conversation history with Nick, had been like, hey, nice fight, man, or whatever he said, and then was like, let's hop on a Zoom, like the likelihood that you would detect that red flag as being like, wait, Nick wouldn't ask me to get on Zoom. The likelihood just is infinitely lower because you actually have the conversation history. Right. And most of the victims, so the other thing is that actually now they're more unlikely to say target you from Nick's account, because you and Nick actually like talk quite frequently and have interactions and stuff. What they're doing is that something that's super common for like VCs, BDs, founders, CEOs, right? You have this whole like old history in your Telegram of like this person that you met at a conference once, and like you took a selfie together and you had a great conversation, and then like you never talked again. And you like remember them and you have like positive vibes with them. They'll restart those conversations and be like, hey, we haven't talked in a while. Like, we should catch up. And for founders who are raising rounds or potentially raising rounds or looking for partnerships, it is completely disarming because you have prior conversation history.
You met the person IRL.
You met the person in real life. You exchange Telegram handles in real life. It bypasses people, and then they're also just quite good at like, so that bypasses, right? And then there are red flags that will pop up, and people do tend to like sort of detect sometimes, but they're very good at just being like, no worries. They'll tell you straight up, Yeah, no worries. Don't worry about it. My security, I had to do the same thing. My security team checked it. Like, it's fine. Just click the button. Just run the thing. And then it
I mean, if your
completely
game is
takes your
social
shit.
engineering, right? Like, when my so I had like a random domain registrar, right? And they got social engineered. The domain registrar got social engineered. And I think this actually happened to you as well, Guy, where like the registrar got social engineered because they've got a bunch of support people wherever they are, who are tired and they're not used to like a high value thing being secured by these systems, right? And this was just like my family office domain. But these guys went and were able to social engineer the support agent, who isn't even supposed to have, by the way, the power to like redirect DNS, but somehow did. So they somehow got like escalated up to someone who actually had the power to do this. And that person was like, yeah, sure. You seem like a nice guy. I'll just change the DNS records on this domain for you. And it took me like weeks and weeks of like hammering these guys for them to even admit that that was possible. I'm like, listen. And so I eventually social engineered one of their guys who was like a bit of like a kind of what's the best way of putting it? Like a kind of pissed off employee. Like they were like angry. Like, so I kept going to like different people. And eventually I was like, hey, I need your help here. Can you actually do this? And this guy's like, yeah, we can actually. Like they tell us not to say.
So you got,
I reverse social engineered.
yeah.
I mean, they're
in order
obviously
to take yourself back.
Yeah.
Yeah.
And so I was able to like create like some affinity with this guy, and he was like, let me help you. I'm so sorry this happened. This company's a piece of shit. Like, it was hilarious. And so he was like, yeah, like I can fix this. And so then that guy was my point of contact from like then on.
And that's the thing is that, so why do people get scammed? Why do people get taken by this? Part of it is they just don't understand what could happen. Dude, who's going to spend a huge amount of effort trying to change the DNS of this domain?
Yeah.
And it's like, they don't realize like, oh, if you redirect a crypto domain, there's like millions of dollars on the table for that.
Yeah.
And it's similar with like the fake Zoom, fake team scams. People just like don't realize that if you copy paste something into terminal and like press run, they use Apple Script, which is like a terminal-esque program. If you do that, if you install a new application, all of those things can do basically anything.
Completely own you. Yeah.
And they do it silently. And the malware that they're doing is really focused on Macs. And it is incredible, horrible malware.
And like as a Mac user, right? Like you have a little bit of a sense of like, I'm on a Mac, like I'll be okay.
Yeah, no.
But so this was actually interesting as well. I use Dynamic Wallet for one of the things that I've been building, and Dynamic Wallet injects into the browser console this giant red text that says like, this is a bad place, you shouldn't be here.
Don't copy paste.
Don't copy paste. Don't paste anything in here. Don't do anything, right? And it was funny because I was like, it kept popping up, right? Because I updated Dynamic and they've changed the thing. And I was like, if I were the scammer, what I would do is I would be like, hey, I need you to open the browser console, and then there's a little button with like a cross out of it. Like press that real quick. Like you got to press it really quickly before the person's read, and then it clears the console, and then it's like, all right, now I've got them. And it's like if you are thinking from that like adversarial perspective, like every attempt to prevent people from owning themselves, you can get around. So
yeah. And I want to just emphasize because this is the thing, this is like the real damage to these is they're using the existing accounts, the existing Telegram accounts. And so it really looks like you have the prior conversation history, and they just go down the list and spam everyone. And they're patient and they're dedicated, and they will just act like normal people. The most important thing that people need to know is like, if you're a victim of one of these and they get your Telegram account, you have to, one, warn everyone, but two, if they like don't get your Telegram account for a second, you have to go into Telegram, and there's like a thing under settings, under devices, where you can kill all of the sessions. It says it's called like literally like terminate all sessions. You must do that, because they're not logging in with your password. And so
Right.
a lot of people, what's happening is that even when they know that they've been hacked, they'll just update their password. But because the malware
They've
is
got an open
taking all
session.
this, they're taking
Yeah.
the session keys, they're using that to relog in. And so we're seeing people get hacked even weeks after they got like initially hacked. They'll
'Cause they
have
just
their
pulled the
Telegram
session.
taken over
Right.
because they just exactly. And so I'm really hopeful. We're all really hopeful to break the cycle, especially they are just going to town right now. We saw like maybe like 15 new accounts get taken over last week.
Wow.
15 that we know about. So these are like English speaking crypto Twitter users. Who knows what's going on with like the LinkedIn and the Chinese community? Like they're also getting taken. It's so bad. I hate everything.
All right. We've got like a minute left here. Let's quickly talk about leverage in Polymarket. Someone invented leveraged Polymarket positions, as is inevitable if something is successful enough. So we saw how well this went for leveraged NFT positions, and we're like, let's roll it out to Polymarket. My immediate reaction to this is like, this feels like pure insanity because most Polymarket positions are super illiquid, and I feel like there's just like people are going to come and do crazy stuff to these positions, and people are going to get wrecked. And I don't know. I haven't looked into like the dynamic and mechanism design of this, so maybe they've got like protections from like wick liquidations or something, but it just feels like there's unintended consequences all over this thing.
Another basis trade for Guy. Let's go. The market keeps expanding.
Well, I was going to say,
as long as you're farming the basis on President AOC's election, just to build up a bit of a war chest for all of us when we're in the gulag, I'm okay with it.
Yeah, I was going to say I was quite surprised. I think it's a cool idea, but like I don't know how big the market actually is. Like the open interest and like size of dollars, I think on these prediction markets is actually just not that big. I think relative to the mind share that they've got. Like you see people talking about this stuff, obviously, in the real world and in crypto like a lot these days, but I think it's like a few $100 million basically across both Kalshi and Polymarket. So yeah, I'm not sure how big the actual market can be for lending against this stuff.
Well, it gets
All right.
bigger if you leverage it, right?
I was about to say, but if we inject that's the whole thing. If we just add some leverage, then it could become $100 billion, and then the problem goes away. Final thing before we wrap up, MetaMask added Bitcoin support, which is pretty cool. Only took 15 years. Congrats, guys.
I'm so proud of our team. I will say,
it feels to me as a MetaMask enjoyer. I still use MetaMask. I never switched to Ravi. I tried it and it was not amazing, and I went back to MetaMask. It feels to me like you guys have been rolling stuff out very quickly lately, which as a pseudo competitor in Infinex, like I don't appreciate it. If you can go back to being complacent.
We still have a huge amount of work to do, but yeah, we've gotten so much better, and we've also paid down years of tech debt, which took an immense amount of effort from every single engineer on our team, like the most grueling, tedious, horrible amount of effort to pay down the tech debt. So we are definitely in a better position. I swapped/bridged from ETH to Bitcoin just to see how the flow was, and it was like super seamless. I was so impressed. You can just get Bitcoin and like it just goes and it's in your existing Bitcoin wallet. It's so nice. But yeah, we'll we've gotten good at rolling out these new networks. We've gotten good. We have prediction markets now too. I think the biggest thing is like we still have a lot of just rough edges, and especially for the power users. Like, we hear you. I'm a power user. My own
hardware
Slack
wallets,
hears
bro.
me.
Like, you gotta pay down that hardware wallet tech debt.
The
That's
hardware
the next
wallet
thing.
debt, like when you have 100+ accounts, like we're still working on those, but hopefully we'll get there someday soon. But yeah, we're still going.
Awesome. All right, that's it for this episode of Uneasy Money. Thank you, Guy, for joining us. It was fun.
Thanks for
Hopefully
having
we'll see you on the other side of the holidays. Thanks for tuning in. If you like the episode, follow us on the Unchained feed on X, YouTube, or wherever you get your podcasts. Happy holidays, everyone.